another edition of Ftmig Live is starting now. We've got a few of us here again. We've got Greg. It says in there that says Brandon. We've got Carl. There's a few of us. Welcome everybody for another show. It's a busy one today.
Very busy.
Should I try to do in 20 seconds or less who's coming on?
Do it. Actually, no, don't do that. Just slow it down.
30 seconds or less. We've got Aurelio Useche from CEO of Relevium. He came on to show us, talk about what's happening there, lots of developments there, so really happy to have him on just a few minutes actually. We've got Chris Arthur. He's our head portfolio manager. He's doing the Ask a Fund Manager. On our Facebook group, Follow the Money Investor Group, we always do a poll now where you can ask your questions, ask a fund manager, vote on them, and the top 3 or 4 he picks each week and goes on there. On that same note, we also have Johnny Mack doing the exact same thing. You get to choose your own stocks, which ones you want. It gets voted on. We're doing GGI, T-God, and Juju today. And then last but certainly not least, we also have Pat McCutcheon coming on, CEO of MediPharm, and he's talking about how they had $10 million of sales in their first month of sales. That's fantastic.
I met them. They seem pretty organized.
Yep. So and that's fully extraction. We've been talking about certain places like that, but I'll let Pat do that because he was really got a lot to speak about on that sense. So that's coming up soon. Packed day today.
So we were at the Cannatech conference yesterday.
We were. How'd you like it?
It wasn't as big as I thought it was going to be.
I missed out on that.
I didn't have a big expectation or anything, but some of the companies weren't there, and I know some flights probably got canceled. So. Yeah,
wicked storm happened during that. And yeah, I was expecting a lot more esports in there. We really wanted to learn more about it, and we did. Chris Perry, if you're watching, he had a nice little 15-minute seminar speech, whatever you want to call it, and he pointed out some pretty good things to look for when it came to esports and that section. So still don't really get it, but I know it's going to be something.
Yeah, well, we're gonna have some companies on, and they're going to explain it to us, the revenues and where they're going to come from, different verticals. I still really don't understand it yet, but a lot of seed rounds out there right now. And
a lot of seed rounds. And you know what? Even a crappy company with a great seed round, if you're a speculator.
Oh, yeah.
Title seemed interesting.
Title was interesting. And what was the other one under Title? It was, I'm trying to think of the specific name for that. But yeah, it was interesting speaking to them and being able to learn a little bit more about these purses and these competitions that are going on. Look, esports is going to have a place in our marketplace very soon. It's already beginning. Look at Gota 2 and League of Legends, where they're going for like $20 million purses for a worldwide trade. That's massive.
Yeah, but who gets those purses?
The players and their management teams.
And how old are they?
Young. Some of them are young.
They're like 14, 15 years old.
Yeah, so it's risky when you go to these companies where they've got these teenagers under contract. Are you safe with that? Is the difference from like a professional athlete in their 30s who understand? Anyway,
no, it's a liability.
Yeah, that's why professional teams don't have like.
I mean, they're teenagers, right?
Yeah.
I don't know. I don't want to say it's not healthy.
Seems a lot more risky.
Yeah.
All day, every day.
But that's why like professional teams aren't publicly traded either.
Yeah. All great points, gents. All great points. We went there to find out some solutions and find out some answers. We did. I think we came up with some more questions more than anything, but still really in its infancy. There's still a lot more time to learn.
I learned that our fund manager, Chris Arthur, can eat a lot of food.
That's a great point as well. So Chris, when we're watching you, just remember, when you see that man, it's not just a man who can tell you about his fun and all these different things that's going on.
He can pack it in there.
He can eat a lot with you.
Where do we go for lunch?
That's an important Scatterbush?
Scatterbush.
Yeah,
pretty good.
Downtown Toronto was good. It was.
Pesto pasta is pretty
good. But getting on topic to go into, which that is a good topic.
Let's just
food is important. We're going to go straight to Aurelio because we were able to talk more about their company. They had several different big news releases for them and big milestones come up. So we're going to go over there now and see what Aurelio had to say about the progression of his company. And we're joined here today by Aurelio Useche, CEO of Relevium Technologies. My good sir, how are you doing today?
I'm well, thank you very much. I appreciate being here at the show again.
Absolutely, and doing it over Skype because snow has been crazy in this part of Canada over the last couple of days. So you survived the snowstorm. Now we're going to be here and speak a little bit about your company.
Yes, I'm actually very excited to be here. As you know, I was supposed to be in Toronto with you guys, And but with flight delays and everything, weather has been crazy in Montreal as well.
Yeah, absolutely. Well, why don't we dive right in, because before we talk about some recent developments that have happened in your company, I want to quickly talk about Weed the People, the movie, because that was screened a couple of weeks ago. I actually went out and watched it, and that's the stuff that actually really hits close to me, because it speaks about pediatric care and how cannabis is taking some of these children off of some serious opiates and some serious drugs. I think one was on methadone, and which is incredible. But I want to talk a little bit about that, because one of the stories in there was of CannaKids, and you've got a relationship with them in their IP. Can you explain a little bit about that movie and about CannaKids really quickly?
Sure. Actually, the CEO of CannaKids, Tracy, she was one of the families that is featured in the documentary. Tracy and her daughter Sophie. Sophie was born with a type of brain cancer that affects her optic nerve, and that was her journey, the beginning of her journey to understand how cannabis can help. She actually, in the film, she's introduced to the whole concept by a nurse who actually was very experienced in treating children. So this was basically the start of CannaKids. At some point in time, she decides that the sourcing of the medication was an issue, that the legislation around it was an issue, and she decided to venture on her own to build her own formulation based on their findings, and they have been very successful. The application of it, the education of parents, and as you saw in the film, which is actually some scenes are gut-wrenching. It provides hope, and that's what the whole thing is about. I think cannabis, what it's providing in terms of pediatric application, is hope for things where normally you're giving terrible medications that have a lot of side effects, but they're FDA approved. Replacing it or combining it with cannabis to have a better effect, and as you can see in the film, 4 of the children go into remission.
Yeah, absolutely. And I know that's not out right now. It's doing special screenings throughout, but you'll be able to see that. I believe I saw it was coming to Netflix or videos that you can buy as well. So really interesting to see, one, because the connection to your company through CannaKids, but just in general, what is capable of cannabis as we continue this path down finding the different medicinal and nutraceutical needs and abilities of this plant. I'm really excited to see that come, both as an investor, but more so even as a consumer and just someone who believes in the plant.
Yeah, we're very excited to start working. As you know, in Canada, the whole process, although it's legal in Canada, there's a whole process for bringing medication, especially for pediatrics application. Anything that touches children, Health Canada will be a little bit more stringent upon. So what we're starting to do so far is look at the SOPs, look at the formulations, starting to build the whole file that has to be presented to Health Canada to get the approval to start marketing the product Canada-wide. I think what I find is the purpose of the movie is education. It's a great piece. As you can see, the movie, it has 100% Rotten Tomato ratings, and I think it'll do very well in April when it's launched in Netflix. But what we like about it is the fact that it educates parents, it educates teachers, it educates psychologists, it educates doctors about the possibility of combining cannabis therapy with traditional therapy. And that's what we're hoping to do with CannaKids within our wholly owned subsidiary, Biocannabix.
Absolutely, and I look forward to that as well. But also changing gears, because something I had said at the beginning that we were going to be attacking something that actually just recently came out, and we really want to focus on this, is the agreement to acquire 100% of Sleepner. That really opens up, or further opens up, what you're able to offer in the UK in those areas, because also Leafy Life as well, back from December, you were talking about those products and bringing those to market. What does this mean for your company between Sleepner, and is there a connection with being able to use it alongside the Leafy Life products as well?
Indeed. So Relevium, actually BGX, which is the company that holds BioGanix, the whole strategy behind it was to go out and roll up all these existing brands and create distribution and create the ability to launch products in the United States, in Canada, and you can see in the UK now. So Sleepner is a small company. It will bring probably around $700,000 of initial revenue, but it's the potential that we went after. They have the owner who's joining our team. She has done a tremendous job of branding products and creating a good following behind them. One of them that we really like, and obviously that you'll see a link right away to potentially launch some CBD-based formulations, is the Love Superfood Tea, which is a tea that is helped to relax you, so it has some relaxing components on it, and it also to cleanse your system. It's a product that is trending everywhere, cleansing teas, and then they have other kind of products. But what we really liked about the strategy of acquiring Sleepner is the fact that it gives us a foothold and a local presence in the European market. So although we launched the company, we launched some products through Amazon.uk. And then we did a soft launch of Leafy Life on a test basis. We think that Sleepner will become central in the whole strategy for launching new products, new services, and also to incorporate Leafy Life into that company. So we're very excited about it.
Yeah, and as you should be, when it comes to the UK, they're very open to CBD products, where a lot of different products are actually health and wellness products opposed to CBD, and they look at it as a drug like we do currently in Canada, the United States. So a lot of opportunity there as well. Now with that acquisition, I got to address the elephant in the room for a moment, because we're seeing a lot of this right now, because there is an acquisition that took place for BioGanix, and in that, Albertus, he had a large sum of shares, I think around 15 million or so, and he's now converted that CD and is looking to release his position. What can you say on that, and what different elements are you able to go about that so that can go as smooth as possible if he is looking to take his capital and move it somewhere else for the time being?
Well, I mean, I like to say that we do follow all the social networks, billboards, and so on and so forth, and I think Albertus has been made into this evil guy, and I think it's a good time to clarify that he's not an evil guy. He sold us BioGanix, and in the transaction there was a balance of sale, and the balance of sale, there was 40% of the balance of sale was a convertible note. He had a 2-year convertible note, and he decided to convert early. It was his choice. I wouldn't have done that. I would have kept on receiving my income stream of interest, and I would have converted when it was the right time to convert. But anyways, it was his choice. He converted. And the reason why he is decreasing his position is financial. He feels he needs to recuperate some of the transaction costs. He's a believer in the company, a strong believer, and he is carefully trying to decrease his position. We're trying to help him by finding either a group of shareholders that will take some of his position, so that will make him more comfortable, or we might use that as a ways to partner with somebody else in some of the new developments that we're doing. So all to say, Albertus is very much behind the company. He has made himself available through some of the chats, and he'll tell you himself he's a big believer in what we're doing, but his finances are his finances.
Yeah, and I've always said that about a lot of people when you see someone who is a part of a transaction, whatever it be, they have the right to sell their securities at some point because that's payment for, well, in this case, BioGanix. So you have to understand as well that there are times where things are very hostile, and we've seen it in the market and in various different places, but there's also times where it's simply someone is looking to move their capital elsewhere, and it sounds like you are working alongside with him to try to find a good place for that, whether it be through a joint venture, working with other companies, or whatever that be. It sounds like you're actively working with them to make it as smooth as possible in the market for shareholders.
We do, and as an important shareholder, we keep him informed of our progress, and he actually contributes quite a bit to what we do. He consults with us very often on strategy, and he has been a great asset. If I was in his position, I would not sell because I have a different situation, but who's to judge? So yeah, we're working with him, and we're hoping that our shareholders will understand. I can see why it's upsetting with everybody. Whenever you believe in a story, you should not be selling. But as you mentioned, money is money, and people's finances are people's finances.
Absolutely, and thank you for addressing that. Moving on to a few other questions that we turned to our various communities, and we were asking investors, we telling them that you're coming on the show, and we were asking what questions they have for Relevium and for yourself. And one of them was in terms of Hemco, your Hemco sales that have been going on. Do you have any type of update? I know actual numbers are obviously material, but how is that going so far?
So when we signed the agreement with Hemco, we were to take over the Planet Hemp brand. Hemco was going through a transition of management at the time when we started the program. So when we started the program, there was a new CEO, and it took us a while to structure how we were going to launch the product. So we did a soft launch of their protein products. We looked at I think we launched about 5 or 6 different products to test the market and test the appetite, because Hemco right now sells through brick and mortar retail, and when you're selling online, it's a completely different approach. We went with their packaging just to test the market. The test did very well. There was one particular product, which is the hemp seed, that did very well. Some other products did not do so well, but that could be a function of marketing, branding, even the marketplace where they were selling. Right, we started the test market in Amazon. So all that to say, we're working with Hemco right now to do a new launch of a new line of products. Within the confines of what I can tell you, and the idea is to create brand awareness and build a sort of a loyal following to the brand. We know there's different segments. For example, the Hispanic market in the United States. We've done a lot of research on it. As you know, it's about 25% of the population in the United States. There's a particular way in which you want to market to them, and what story you want to mention to them, and how you want to reach them. So we're building different programs in conjunction with them, and that may include the UK as well. The Hemco has a presence in the UK, and we are looking to include that strategy into the Sleep Near acquisition. So we're in the early stages, but I see tremendous potential in what we can do with Hemco, Planet Hemp, and subsequent brands and products that we are in the midst of designing and eventually launching.
Absolutely, and yeah, like I said from the very beginning, when it comes to CBD products and different hemp derivative products, the amount of possibilities are endless. Not just for your company, for the market in general. It's going to be a really, really interesting thing to watch over the next couple of years, and it's been exciting to hear your progress since we last spoke about having more of these put in place and pushing forward, and it's great to hear. Now we did have a few other questions, but we're all finished for our time today. But there's something that people could turn to, though, because I'm glad to see all these questions that are coming in. And you've actually set up a conference call on, correct me if I'm wrong, February 8th, I believe, where you can be emailing your questions in, and your team is going to be answering those in great depth and going over different elements that investors are looking for. What type of information can we have for that conference call, and how can people participate?
So we sent a link on the press release. That's the easiest way. You need to pre-register for the conference call, and there will be a way in there, some instructions on how you can send your questions. You can also send them to investors@releviumcorp.com. And I believe there's some social promotion going on about the call. You can also submit your questions through Facebook or Instagram or even any other social network. So what we want to do is that we want to, number one, I want people to speak to the team. Probably it'll be the first time that shareholders meet Faisal, who joined us last year, our CFO. Most people know and are familiar with Abbas. Abbas will be here, Faisal and myself. And the idea is to sort of express and explain to everyone what is our strategy for the year, get a level of comfort with our shareholders. It has been the stock price of 9 cents, 10 cents, 9 cents, 10 cents has been a bit of a sore on everyone's side. I complain a lot about it, but it is what it is. We keep on moving forward in the execution of our strategy. And so the idea is to provide some clarity about what we're doing this year, who we are, why are we taking the decisions that we're taking, and also open the forum up for any questions like today. You're asking about Albertus. These are all important questions. We are more than happy to answer any question and provide clarity. We're very transparent in what we do. We are a huge believer in our company and what we're trying to do. And we're hoping to get that same feeling across our shareholder base and across new investors that may want to come in and take a position in our story.
Absolutely. Well, I appreciate very much. I always like seeing companies who will go out there and open the floor for questions for their investors. Looking forward to that coming up in February 8th. Thank you very much for your time as well. I hope sooner or later the snow situation in Montreal, which it never does, it's just normal in Montreal for this time of year, but good luck with all that as well. And thank you for coming on the show. Looking forward to having you on again soon to talk about more of your developments as they come to fruition.
Thank you very much. It's always a pleasure to be here, and I look forward to the next opportunity.
Absolutely. Take care now. And back. Thank you very much for that, Aurelio. I appreciate it. Yeah, we've got two people on here I'm really excited to speak with and have their companies here because I love the
Carl
companies that Carl and Greg. Wait, I love seeing companies that are doing something different. We've talked about this for a long time. If you're just going into a grower anymore, I gotta watch out for that. But I watch Weed the People, and I've been seeing this for a long time. This is actually, my mom's watching right now. This is why you agree with cannabis now, is when you start seeing the medical properties or the medical capabilities of cannabis. And in that documentary, Weed the People, there's a kid there. I can't remember his name, but he was on opiates and methadone, and he was like 12 years old.
Jesus.
And this kid can't even move, can't walk. Yeah. And then they had to actually give him, I think it was to give him methadone to take him off the opiates or something along those lines. But in the end, he went almost strictly over to cannabis. Mm-hmm. What would you rather have your kid on? Cannabis or that's why I like this.
It goes back to, remember we that person we met in Eaton Center. And she was so against it, and she had cancer. And I'm like, wow, it's crazy. But you know what? There's still a narrative out there. I have to change it. That was a fantastic interview, by the way. Yeah. You asked some good questions there. It's extracted the value out of him for investors, and we'll go back to them with follow-up questions. That was fantastic.
Yeah,
that interview is all about what we want to do here.
Exactly, and looking to so on that note, actually, I want to point something out. I don't know if my NDI is up. If you can throw that up there, I've got a chart open. It's Relevium's chart, and I'm being told it's not showing up. But if you look at their chart, though, it's been trading rather horizontally for quite some time. And now that 15 million shares is out there, people know about that. And that's why they wanted us to ask that question and be able to go through it. And hearing the answer of why those shares are out, it was to buy BioGanix. That was a part of the transaction. And I'm going to be a speculator here. They've got the Canna Kids IP, and they've got these different elements. And that was the Canna Kids. That's the pediatric care, helping cases of cancer and using cannabis.
Yeah.
Finding a way to bringing it into, I think you can put up the chart whenever you want, bringing those things to Canada. If there's a joint venture, or if there's something out there, that's a home that you can find for those shares, because we all know, we've seen it in MPX. Greg, you and I invested in MPX when we knew someone was unloading. That's actually when we started buying, because we knew
really
about it.
it.
And we finished it and started going. So here's the chart here. You'll see it's really been horizontal over this last little while here, sticking in between around 8.5 and 10 cents. I'd love to see this start moving.
But the volume.
But you have to also know about those shares being out there, and I really was very, very upfront with why that's happening. And look, people have their own money. They can do what they want with their money. At the end of the day, they make certain choices. That's it. Now it's up to the company to hopefully find a home for that, so we can start moving forward. So, thank you very much for that. Really, I appreciate your time very much. Speaking of people's time, we appreciate very much. Another person is Chris Arthur, who was in here earlier today. And again, we said this at the very beginning of the show. We're doing a poll. You got questions. If you're just new to investing, or if you're an intermediary and you want to ask advanced questions, ask them, vote on them. He'll come in and he'll break them down. I love the idea. I think this is your idea, actually. I can't take this. I think this is Carl's idea about Ask a Fund Manager.
I think I told him.
Yeah. We'll
Doesn't
give
really matter.
what was that, a little golf clap? Can you see my hands there? 2 fingers. That's all we do it with in golf. But we're going to go to that video, though, because there's some really interesting questions, and he took the time to go through them. If you want to learn, keep watching. And we have Chris Arthur with us yet again for another round of Ask a Fund Manager. How's it going?
It's going well. Well, yourself?
Doing very well. Thanks for coming out to the CanTech conference as well the other day, yesterday. I learned a few things there and was able to see a little bit into the world of esports. So that was very interesting.
So a lot of interesting presenters over there. If we have some people in the community interested, I would say throw your questions on the board for next week, and we can have at it there.
Absolutely. And speaking of throwing questions onto the board, so for all of you who are watching right now, if you go to Follow the Money Investor Group on Facebook, we start a poll every single week where it's called Ask a Fund Manager, and we have questions for yourself where people can put your own questions in there. What is CDAR? What do you look for in a company? All those different things. We vote on them on Monday or Tuesday night before our show. We see who the winners are, and we bring you on the show, and we're going to go through exactly that. I'm going to ask a fund manager these questions.
Fund manager, and I would say with the questions, don't be hesitant. This is no judgment place. Whether you think your question's stupid or not, it's not. Feel free, put them in there, and then the group will vote for the top choices.
Absolutely. Well, why don't we just jump into the first one here? And I like this one a lot, actually, because it has to deal with averaging down.
Yeah.
So, what does it mean to average down, and do you recommend it, and when?
So I'd start off by saying, yes, I do recommend it, but only in certain scenarios. So I would like to start off by saying, what is averaging down? So averaging down is when you're purchasing additional stock to a security you already own at a lower price point. And the goal is really to lower your adjusted cost base, or the average you're paying for this stock over that time. So say you bought 100 stock of a certain security for $50, then you bought another 100 for $30. You have 200 stock with an average price of $40. So you lowered that down to 50 to 40. So this is only recommended in certain scenarios. So if the stock has good growth prospects, but it was maybe just beaten down from bad earnings, investor sentiment, or overall market conditions, but the strong fundamentals are there, this would be an opportunity to buy at a lower price because it will likely rise.
Yeah, and one of the things you really have to watch out for, because I've done this myself, and I've done it, and some of the times I've been really successful with it, because if you're averaging down, you're bringing, obviously, like you said, you're bringing down the average price of your of what it is for those shares. So $50, you buy some more at $30. Well, now your average price is at $40. So now that price needs to go over 40 for you to be in the money. But also, you got to be very careful that you're not catching a falling knife, meaning you're not trying to say, oh, it's down 20%. Oh, it's got to be an amazing buy now. I'm going to buy it, and then it goes down another 20%. I'm like, oh no, well, I'll buy more, and then another 10%. Yeah. That's dangerous if you get caught in that.
No, and that's something that falls to a lot of investors there. But the biggest thing I find is you really got to take your emotion off the table. So with stocks, it's easy to become emotionally attached to the stock. You got to make this a business case. This has strictly a business business opportunity here. So you got to really judge the fundamentals, do your due diligence. Will it likely rise in value, or maybe is another company a better spot for your money?
Yeah.
So you really have to do your homework there. And likely we see the strategy used mostly with blue chip stocks. So those high dividend payers, mature companies with those low PE ratios. It's not used as frequently with speculative stocks or let's say stocks with more volatility. It can be used, but your homework has to be even more thorough in those cases.
So to solidify that, yes, you can average down. It could be a very advantageous thing to do, but don't do it simply because it's a lower share price. Do due diligence. If you really believe in the company, then there's a case to be made that yes, you should average down if you believe in them.
Exactly, and I would say we have a great community over here, lots of intelligent people. Bring it to the group if you're unsure or you're going both ways, and we'll be happy to help you out there.
Perfect. Going on to the question 2, and this one I actually really like because I don't know this fully. I try to guess this all the time. Institutional money for 2019. Where are the institutions looking at right now for where they want to deploy their capital in Q1, Q2, or in the somewhat near term of this year?
Yeah, so great question. I really like that this question was asked as well. So we're seeing a few trends for the 2019 year. I'll start by just going through the asset classes very briefly. In terms of equities, we're seeing low growth prospects, and we're seeing relative volatility that we experienced in 2018 to follow through to 2019. So given this, we're seeing higher exposure to the emerging market equities, specifically European, Japanese, and Asian markets. We're seeing higher allocations there after the Brexit aftermath. The UK stocks are very cheap relative to North America, so we see a higher allocation to emerging markets in the equities format. When moving on to fixed income, we're seeing very low yields in the market, so you're not getting a lot for your money. So we're seeing institutional money heading towards what we call junk bonds over institutional grade. And what this really means is institutional grade bonds have a higher credit rating. You're more likely to, let's say, get your funds back from them, more safe. And then when we move to junk bonds, the credit rating isn't the same. There's less likelihood, but you're getting rewarded with a higher return. So we see more and more money diverting to lesser grade investment bonds for the 2019 year.
Gotcha. So they're obviously trying to get some returns because after the beginning of last year and subsequent years before that, returns for these institutions has been very, very high because everything was going up, everything was great. Well, then you got the last 6 months of 2018, especially December, the worst month that we've had since the 2008 financial crisis.
Yep.
So now they're trying to think, okay, you're moving away from some secure debt because they used to have whether it be government notes or whatever it be, but now they're looking for junk bonds because they need to get a little bit more of a return. They can't go from 10% a year down to 2%. Everyone's like, what's going on?
No, exactly. Cash on hand as well, speaking to that volatility, weak growth prospects in equities, we're seeing them keep more cash on hand. This can be exploit opportunities or simply to dampen the volatility of the portfolio as a whole.
Well, that goes right into the next question then, is when it comes to cash as a position. Yep. Not many people, when you talk to them, if they're just learning how to invest or whatever it be, you say cash is an asset, cash is a position in your account, and they'll look at you like, what do you mean? No, if you got cash, spend it.
Exactly, invest it, yeah.
So when it comes to institutions, or it comes to yourself, do you see cash as an asset class that you should always have, or do you go in and out of having, say, fluctuating between 2%, 5%, 10% cash? Because obviously you want to have some cash on hand. If you ever get a huge correction in the market out of nowhere, you want to have some gunpowder to be able to go at it.
No, yeah, it's a great question. I would like to start off by saying yes, I recommend always keeping cash in your portfolio. When you look at institutional money managers, pension funds, or even Warren Buffett, they're all keeping cash on hand in their portfolios. Yeah. So depending on the market climate, the amount will vary. And also depending on your holdings. So the more volatile your holdings, the more speculative they are, that would lead to having more cash on hand in the portfolio. Yeah. I myself, right now, I'm holding 20% in cash. I really want to have it there to keep myself advantageous. Should those corrections happen, should an interesting buy happen, or even if I want to average down on a stock, I have that cash on hand there.
Well, that's probably one of the biggest lessons I learned because, I've always been a very, very speculative investor. That's just who I am at the core. I'm okay with that because I know that I don't have a wife, I don't have kids, I don't have a mortgage. I know I can be riskier with my capital. But what I've really had to learn, and this was after last year especially, was I actually almost always have a cash position now. Even though some people might look at that, I'm like, oh, it's not doing anything. Yeah, but it's not going down. And that's one aspect, but two, when if you want to average down on something, or you see something come up, like, hey, I've got a little bit to go into this. I want to average down on XYZ company. I got a few thousand in my cash component of my ass. Then you can put it into there. So I do like that as a part of my portfolio now.
No, especially with the 2018 year, 2019 year, we don't know what the markets are going to do. One quick movement, one quick, let's say, tweet by Trump, and there could be a very good deal in the market. So you want to have your cash ready to be disposed at any time, especially in this climate. And another point to that as well, I know you mentioned no family, no kids, but for those who do have family, the kids, a home, something could happen, a leak in the roof or what have you, and having a bit of cash on hand, and let's say the market's down, you don't want to be selling your investments when the market's down. Having a little bit of cash on hand does help there. So general rule of thumb, about 6 months living expenses. And if you're comfortable with leverage, have it in the line of credit. That's where I keep my liquidity. Just have that fund sitting in the line of credit. Don't use it, but it's there if I do need it.
Yeah, and I like that point because you went more into a personal investment side of, or personal finances side of things. Because yes, I think so many people overextend themselves because they see this train going, like, I don't want to miss it. I don't want to miss it. But then all of a sudden, something happens that you may not have foreseen. You get the perfect circumstances, like you said. Trump could have put out a tweet. Something could happen in China. Anything can happen. And then all of a sudden, you're looking at yourself saying, oh no, I don't have enough for rent. Now you have to start selling your securities that otherwise you would have held because you believed in, you thought they were going to go back up. But if you're stuck, now your back's against the wall, you got to act on it. So you got to be prepared, have some cash on hand. It's okay to have cash because you need to be safe.
No, you got to have that cash on hand, whether you're comfortable with a line of credit or just having it in a money market fund or what have you. I always would recommend having a small cash position in your portfolio at all times.
Perfect. Well, hey, we usually go through the top 3 questions, but we were able to get to the 4th one because we've got a couple more minutes here. And it's a really interesting one because this came up with a financial raise that was happening recently where an offering memorandum was put out. And there's a difference between offering memorandum and what you usually find in normal private placements where you need to be accredited to get in. But an offering member, what's the difference between those? And then throw in prospectus in there. How does that prospectus tie into this as well?
Yeah, so I would throw in prospectuses and offering memorandums as the 2 main categories that you're looking at. When you're looking at prospectuses, this is bringing public securities to the market. So this is a more stringent process. You got to file with the securities commissions, longer delays, but in the trade-off, these funds are normally readily available to be traded after the prospectus is issued. Then looking on the offer and memorandum side, this is for private placements offerings. So this is where we're going to find accredited investors entering the space, less stringent. So companies that aren't public often go this route. They do often extend this to what we call a friends and family round. So depending on the company, this can actually extend to the broader market, and a lot of people can participate in these as well.
Yeah, because I recently saw an offering memorandum that went out where it basically said under $30,000 you can just go into the private placement. Over 30 and under 100, so 30,000 to 100,000, you needed to have someone sign off on it that was registered. So say you went to your broker or your financial advisor, whatever it be, they can sign off saying, do you know what you're doing? Okay, you do. And then over $100,000 it was accredited. And I thought that was a really, really interesting way of doing it because I agree with that. I've always had a thing against accredited investment, I guess accreditation. I don't know how you even say that in that plural, but I can't stand the fact that if I've got 10,000 or 15, even 20, 30,000, and I don't have $1 million in assets, why can't I invest in a company that I see value in, yet someone else can? So I like that little bit of a threshold. That's that lower end, 0 to 100,000. You need some discretion. You can go into it. Then over 1,000. I mean, if you're putting in over $100,000 into a company, you're probably accredited.
It makes sense there, and I find we're seeing more and more companies going that route, accessing the broader market by having that limit of, let's say, 0 to 10, 0 to 20. 20, 0 to 30, where the broader market can participate. Over and above, you must be accredited or part of a friends and family round. But no, I do like where the industry is trending in that regard.
Perfect. Well, Chris, always a pleasure having you on. Thank you again for another round of Ask a Fund Manager. Like I said earlier, go on to our Facebook group after this, follow the Money Investor group, and you'll be able to, probably later on tonight, we'll start that new poll. If you've got a question and you're very curious, doesn't matter how amateur the question or how in-depth the question, throw it in there. We'll get people voting on it, and the top ones get picked and broken down on the show.
Sounds good. Yeah, thanks for having me, everyone. Cheers, Brandon.
Thank you very much. Chris, thank you for coming. Chris, thank you for coming on the show. Love it, man.
Yeah,
That's the stuff.
he's
awesome.
amazing.
Love to hear.
Yeah, see him look at the camera too.
Yeah, go ahead, show him what you got too.
He's going. Oh yeah, right there. Look at the camera. Look at the camera.
Professionalism.
Just want to give a shout out to Stephen LeMay.
Stephen LeMay.
Yeah, his Facebook, his picture is Biggie.
Very nice. Very nice.
Wow, cool.
But yeah, no, that's, like I said, that poll's coming up soon. So thank you very much. We're going to be having him on a lot more often. We're going to go more in depth because he's got a lot of the answers that I want. I've got questions for. He's got answers for.
I think he's actually allowed to recommend stocks.
Yeah, he is. He's very certified. I would hope so. He's a hedge fund portfolio manager. I hope that he's able to recommend
Hedge fund.
Yeah, a head fund. So, you want to do a 45-second review of the cannabis space right now?
Go, what's our movers,
You
buddy?
already said yes. Perfect. So, really fast here. We've got Afria is up 5.5%. DNAX is up 20%, ripping. Prevceuticals up 11%. NBUD is up 8%. TPB is up 12.5%. We've got CXXI, called it a long time ago. That's up 8.33%. Switching over to the United States. Keep it going.
Goes up, he's just going to say
We're up 11% on Dixie.
Why are you yelling
A lot
right
of
now?
red, actually. A lot of red. This isn't. I'm not yelling. This is just the way I talk.
No way, hot tall.
You ever watch that? Samuel Jackson. It's my beer.
DNAX is at the
People have no idea what I'm
conference.
talking about.
Block strains at the conference.
Yeah, they were.
They weren't at the booth, so
They were
couldn't
not.
talk to you guys.
And then in mining, I think the only one that's really ripping is Sick. Sokiman is up 16%. Things are flying today, man. Things are flying. It's good to see.
I just want to take this opportunity to remind everybody, there's a lot of Facebook groups out there, a lot of communities. Just be careful which ones you're in. There's a lot of good ones out there, but there's also a lot of shit ones who have really bad intentions and you don't know what they're up to. So be careful.
Yeah, that was the first time I haven't seen Father Carl say poo.
They're poo.
There we go. Now it's child appropriate. If
Also,
you've got
want to
kids
give
watching this, I don't know
want to give
why.
a shout out to Ross Chapman, who runs his MMJ investing.
Yeah, absolutely. Beautiful. K for Carl. Is that why you're playing out that mug?
Fucking right.
Yeah. Well, gentlemen, we knew how packed this day is, so we're going to keep going right into our guests because as much as people sometimes love hearing us speak, Pat is way more animated than even I am. He came on and he was lightning fast with all of his information. Lots of cool stuff. $10 million in revenue the first month. That's actually quite significant. We're going to go to that. I won't even point this time. I'm not going to point. I'm just going to say we're going to go watch and see what Pat had to say.
Give him a head nod.
A head nod. Once again by Pat McCutcheon, CEO of MediPharm. How are you doing?
Great. Thanks so much for being on the show again, Brandon.
Absolutely. And for those who are watching, by the way, we did have an introductory interview earlier. You can go to ftmig.com and find it there. It gives a great overview of who you are because we're taking today, you've had several milestones since we last spoke. That's what we're going to be talking about today.
Yes, we've been really busy for the start of 2019, and we're really excited actually to start a new year. 2018 was very much a prove-it year in terms of understanding where we sit in the value chain and really executing on some of the milestones that we now have press released over the last couple of weeks. So just even to start off the top, we'll go right from where we've positioned. We've done over $10 million in our first month of revenue, which is an absolutely
fantastic,
very unique play in the industry overall. It's really come down to show and differentiate what a true extraction-only company that focuses on specialization and a broader supply chain than a vertically integrated company. And so we've really given ourselves the ability now to purchase from a number of different supply sources, large volumes of supply, which have given us the ability to achieve large partnerships such as Canopy Growth.
Yeah, and I was going to say that's a very big partnership. If you're talking about those cannabis companies that people have heard of before, number one, people who don't even know the industry will probably say Canopy Growth.
Absolutely. Canopy Growth is a very respected partner of ours. We really appreciate what this means in terms of a long-term partnership and also the volume of product that's changed between the two companies. The only way we were able to achieve this is by buying from a number of different suppliers, as I mentioned before. So we actually buy now from 20 different cultivators.
Wow.
And we've got a long list. We've got about 20 cultivators that still want to work with us in terms of wholesale, business to business, which I think that shows another point in terms of the evolution of the industry itself. So we press released just in the start of 2019 that we had purchased 1,600 kilos, just over Christmas actually. Yep. And this has given us a great ability now to follow up a very strong finish last year in the Q4 with our first $10 million of revenue, and then follow through with a continued high volume of sales in Q1.
Yeah, if we could put the visual up really quickly again and have it up there for a moment, because it's interesting to note a lot of people these days are looking for companies that they can find either to be undervalued or they think there's a lot of growth potential there, especially when you're pairing it with revenues. If you look at this up on the screen here, 10 million in sales, that was the first month of getting sales out, and a market cap of 197 million, where we've got some other comparisons over there with quarterly earnings and whatnot, but look at the market caps for those ones compared to yours. Do you think you have an advantage here?
Yes, well I think we have definitely an opportunity now, and in terms of investment opportunity, we've got a great value stock that has a lot of opportunity to run now relative to the number of other companies that have shown these types of revenues. So a company that got its license as number 95 and has just got their sales license November 9th, so just given us 1 month, we've now put ourselves into top tier 1 or tier 2 in terms of revenue. Yeah. We have not obviously come out with our financials yet for Q4, which we're excited to show the industry. But what this actually positions is that the cannabis industry in Canada really needs to focus on where they sit, where companies sit in the value chain. You have to choose your spot, and then you have to execute on that spot. For us, extraction made sense. We've put together an incredible team of pharmaceutical manufacturer, sales, and strategists to position our team. And we've just recently actually, which we're excited to push to the public, put together a science advisory board, which we're going to have 9 different PhDs that range in scope from primary extraction, which is CO2 extraction, to secondary extraction, which is distillation or purification, and then to how we actually, the logistics of packaging. So logistics of packaging, which we needed a lot of support from consumer packaged goods groups and other areas that looked at large volumes of product to market. And so we define this segment of the industry as the final mile. The final mile really is where it seems to be pretty apparent that a number of large companies haven't been able to actually get the volumes of bud or flower actually to the shelf. Yeah. And so where MediPharm has really positioned itself from the extraction piece to now actually bringing that oil into a tincture bottle or a gel cap and to get it on the shelf really gives our partners, our cultivation partners that we work with, the ability to hit large revenues. So there's large volume distribution, large revenues.
Absolutely, and you made a really good point there where people need to find their position in this sector. It's amazing. I've been following this for years now. How many companies have not found their position? They're going to have this facility, they're going to have this extraction, they're going to be in Europe, they're going to be here, they're going to do beauty products, they're going to do food products, they're now going to do pet products. Pick your sections and do it well. And that's what I liked about when you first came on the show and you were saying we're sticking to extraction. This is going to be our forte.
We're sticking to extraction and we're executing on the business plan. We've raised relatively a smaller amount of capital, and now we've executed on much larger relative revenues to how much we've raised. And this is actually a key dynamic of this is to having a company that's very focused and all strategically aligned. One of the things that we've done for the company itself to position ourselves to the same aligned target is to ensure that we have an options package for every person that actually works at MediPharm Labs. This creates a system where everyone buys into the same goal, and we've actually now been able to, in a number of different instances, let's say, protect our great people from being poached to other groups in the industry. Yeah. And so this is a key element. When you're a specialization company and you're actually now proven as executors in the industry, there's a lot of risk of tearing away some of our higher end professional people. And so this has actually been a really key component of the cultural perspective of MediPharm Labs, and I think it's resonating in the industry now. One of the other pieces that I think is a very key element to be mentioned, and I think maybe we've got a slide for this, is to say that we've just been added to the Horizons ETF as well.
Saw it just at the end of the year.
Yes, that was a great little catalyst to end 2018 and to start 2019. So another key component to show that now we're graduated into the next league, let's call it, and now we're positioning ourselves as a major player on the extraction side, which we've chosen, and being very competitive against a number of different vertically integrated players or companies.
Yeah, it's interesting that you say that about the IP, which at the end of the day, intellectual property is so important, because as we're going on, we are having specialists emerge in here. I'm sure they were there before, but now they've taken the last couple of years and their stage extraction, they would have been something beforehand. They're like, cannabis is amazing. Let's try. And once you have that, you have to protect it. So it's interesting. I didn't know about that actually, about all of them having options planned. That's a very good way of keeping them in-house.
Something interesting about the industry, I think everyone got in Canada and globally. It was very exciting to look at the cultivation perspective, and then it was very exciting to look at these major companies so they would potentially be able to execute on all levels. I think in any industry, and obviously we use the evolution of the pharmaceutical industry as kind of the learning ground for how we've designed and engineered MediPharm Labs. If you look just past the initiation of such a new industry like cannabis, you look at then companies that can execute and actually move product between different value sides of the chain. Mm-hmm. And so one of the biggest pieces here that was important to us was to focus on some of the leading edge technology in the industry, and then to position ourselves in that technology itself. So to explain that piece, there's a number of different kind of perspectives to extraction. There's primary extraction, which gets you to a crude oil, which we're currently selling now, and that has a considerable amount of our initial revenues. We sell crude oil to Canopy, and a couple other partners that we've done with our first revenues. When you move from primary extraction from a crude oil, you move into what's called a distillate, or a purified level, let's say, from a 75% into an 85 to a 95% purity level. These distillates are arguably a cleaner product and are much more appropriate to put into a vape pen or into an adult use product like a tincture bottle, and actually get a better flavor to them.
Gotcha.
This has been an important piece where we've moved now concurrently from a primary extraction platform into this secondary extraction platform to position ourselves now to work with companies that want to execute on large volumes of these adult use products in Canada, or at a higher purity, so that we can work with major players on the pharmaceutical side, let's say. Yep. When you're looking at building teams to execute on a specific part of the value chain, you have to very much align your resources to where you want to distribute your products. And so very simply, aligning our resources to the secondary extraction to get these higher level purities, to make products that give consumers the confidence in the ability to dose and have the same dose every time, is a very key component of our evolution of our business.
Absolutely. And speaking of different formulations, different things you're doing, you actually won an award recently as well. Can you explain that really quickly?
Yes, so at the Lift Awards, it was very exciting. We won 2018 Startup Company of the Year, which is, again, it was a very proud moment for our company, and really gives us a position to actually stand on the stage with a number of other major players.
Yeah. And then being on that stage and having that award, we're just seeing the visual go up there. Mm-hmm. Another thing as well, and you briefly mentioned it there, was talking about preparing yourself for the next step. And that has to do with regulations and what these regulators are going to bring in when we start bringing in edibles, or we start bringing in vapes. And it sounds like, and you were just saying actually, that's where you're gearing towards. You want to be a specialty person. You want to be one of the go-to there. What do you think is going to be happening, or how are you preparing for that, for when, I believe it's at the end of this year, we're going to start seeing some of those come into the legal Canadian cannabis space?
Yeah, so basically we want to be a major player on the packaged goods side. So actually we can work with different edible companies and different companies that are looking for white label solutions with a partner that can deliver on volumes consistently. Yeah. So it's very important for us to position as a CGMP compliant company. And when you look at GMP, it really lines to your ability to replicate your extraction procedure, as well as to replicate the product each time you deliver it to a partner. And so if you look at CPG companies that actually distribute large volumes of food products, they have to have the exact same product on the shelf every time, or else you lose lose that adhesion with your customer in terms of your brand. We are the connector in the industry between cultivators that grow the plant themselves. We connect the cultivators to different groups that can move large volumes of products that need to have the same effect every time. And so when you're looking at different jurisdictions like California or in the US, as they've evolved, there's been a number of risks where you're getting different products and there's recalls and challenges to actually have that sustainable production. Yeah. This has been very key in terms of where MediPharm Labs has picked its part in the value chain, and so we can deliver large volumes to these consumer packaged goods groups at high replicability and high value.
Yeah, and consistency is massive. I was actually watching a panel recently that was speaking about how when cannabis starts coming into the medical space, it's very, very hard to have the flower as a true medicine, simply because you can grow 15,000 plants in the best way with the best SOPs. Each one way or another, is going to be slightly different. You're never going to get the same. But when you're taking it from, you're actually extracting those cannabinoids, you're putting it into a state where now you're getting the same thing each time. That's what people are going to be looking for when you're looking for either a medicinal product, or like you said, if you're getting a vape, if it tastes one way or gives one effect one time, but the next time you have it, it's completely different. Can you imagine if you had whiskey and one time was one, the other time was completely different, it was sour or something?
Absolutely.
That's where I think this huge focus is going to be turning to.
Yes, it's a very key element of the business, and I think that's been missed from a number of companies, as I mentioned. To get reliability and then to have a customer enjoy a brand and expect the same reaction each time, the only way to do that is to actually prove yourself in terms of your quality. MediPharm Labs has very much picked itself as a quality player, and extraction really gives us the ability now to execute on such qualities while aligning to, as I mentioned before, pharmaceutical or GMP kind of methodology perspectives. It's interesting that a number of different players are challenged actually to move the plant into these different types of extracts to get into these packaged goods. And with MediPharm Labs in particular, we really have brought together the team that can do it and actually differentiate that piece. So we really look at the opportunity to grow with the industry itself and to deliver on what we've said we've wanted to deliver on in the first place.
Absolutely. Well, I appreciate you coming on the show. You're always full of energy and lots of information in the sector. For those who are looking to look for more, they want to see your investor presentation, they want to see your website, now's your chance to let us know where we can find out more about your company.
Yes, so our company website is www.medifarmlabs.com. We're trading on the TSX-V now as LABS. Check us out. Please watch for the next lineup of PRs we have coming out, focused on how we position ourselves to access large supply and to have these large outputs, and numerous more customer partnerships that we're going to look to continue to expand globally and to position ourselves as a real player in the stock market.
Absolutely, Pat. Always a pleasure having you on. Thanks for coming down.
Thanks so much.
Good luck with the rest of the year and everything that's coming on through your company.
Thanks a lot.
Absolutely. And once again, another thank you, this time going out to Pat. I appreciate very much for you coming in.
So much energy. He is excited about his company. That's
awesome.
awesome.
Let the producers know that Johnny Mac is calling in right now.
Very nice, very nice.
Another good interview, Brandon.
Thank you. High five. I told him in the interview afterwards that for some reason we do high fives after the show. He goes, really? And we, sure enough, we did. We haven't done that since like the second week of.
We also don't wear suits around here either.
We don't wear suits. Yeah, I'm wearing like what would you call this, fuchsia? With a nice little grandpa pullover.
Yep.
Yeah, good stuff. But back to thanking Pat before you interrupted me there. Pat, thank you very much. And there's no kidding. When he comes in, he speaks about his company and just cannabis in general in such an emphatic way.
Yeah, when that chart came up about their money, that 10 million, and then compared to market caps and every other company that's up there, that's insane to look at.
Yeah, and for those watching, we did have an introductory interview with him as well. You can find that on ftmig.com. Just search MediPharm. You'll find it there, where he first came on with Michael Garbus. Vision Advisory. Came on talking cannabis, talking to his company, so that video is there for you to find out a little bit more. But I'm hearing that Johnny Mac, the man, the myth, the legend, is on the phone right now.
Hey, John.
Let me help you. No.
John, are you there, sir?
How are you guys?
Hey, buddy.
Can you hear me okay?
Can hear you, man.
Hear you fantastically.
It's minus 25 here, John, with the windshield.
It's freezing.
Just letting you know.
Well, count yourselves lucky. It was minus 37 here with minus 50 degree wind chill. So I think I have you beat.
Yeah, no kidding. Surprised your computer
Let's
didn't
just get
freeze
right to
on
the TA.
Yeah. You have to one-up me.
Make some money so we can leave.
So what company are we going into first, my good man?
I think we'll probably start with Garibaldi. I think that was the #1 pick. Just a quick market update. The markets are up today, but expect some volatility, and I would expect some volatility any minute now. The minutes of the Federal Open Market Committee will be coming out in approximately 1 minute, so there's always a lot of volatility on the large cap indices in the States, and that will be interesting to see if we get sort of a bullish break from our recent consolidation, or are we going to sort of reverse the trend and go bear, or is it going to just move sideways? So that'll be an interesting question to see.
Nope.
So stay tuned for that. So anyway, Garibaldi, it's been a while since we covered this. I think the last time we covered it, we were in this big rally. Yeah, I think we were in this big rally here. And I think I went on record as saying I felt this rally, it felt a little bit premature to me. I wasn't expecting this to hold, or I thought it was going to give back a bit, and it ended up doing exactly that. So we got a rejection off this resistance here, around the $1.50 level. And what we were looking for was a higher low to be put in, and we did get that higher low, so compared to here, of course, but the problem is we gapped down. That gap down was done on relatively high volume. So again, we weren't quite 1 million shares, so from an absolute basis, it's still not a lot of volume, but from a relative standpoint, compared to how the volume was before, that's what I'm trying to highlight. So we did get a gap down here. So because of this gap down, I've highlighted this area here. We would expect some resistance in this area. So the 120, like basically the low 20s, high 1 teens, low 120s. So if we were to get back up here, I would expect some resistance to come in, because anytime you get a gap down with volume, it's gonna give you either support or resistance depending on how it's broken. So we had our higher low, but you can see the rebound attempt was really mediocre at best, the very little volume, and we fell right back down to this longer term support area I've mentioned in the past, basically around $1, and that's been a support for quite a long time now. Unfortunately, we were getting some intraday moves below, and that was holding. I think the line in the sand was basically 95 cents, but you can see here on this day we actually got a close below what I would deem the support area, and then on the rebound, the subsequent rebound, we weren't even able to get to the top of that previous support zone. So to me, that kind of confirmed a support break, because we're seeing it act as a resistance now. So what used to give the stock some buoyancy to push it up is now acting as a resistance. So we broke that 95 cent level. We ended up down into the mid 80s. So we're below $1, first time we've seen that in a long time. And then basically what we had here, this rebound, I would call this basically a bear flag. This is done on very low volume. You're not seeing a lot of conviction, even though the stock is generally moving up. Wouldn't say you're seeing a lot of conviction show up with the buyers in terms of the volume. I don't know if everyone can see at home on the screens, these volume bars are pretty low. And then we broke bearish from that, and that break happened on, again, relatively higher volume. So not on an absolute basis. 350,000 shares is not a lot, but on a relative basis, we did see the volume pick up, and we broke bearish from that little bear flag. So, I mean, the line in the sand right now to try and hold is basically 86, 87. So we've had, let's call it a triple bottom. We've had 3 tests of that level, 86, 87, call it basically the same level. So that level needs to hold, and if it doesn't, then we're going to head lower, and I'll zoom in a second. But I wanted to note, and I've mentioned this several times on Garibaldi, we definitely have a very distinctive resistance area on our RSI. You see we've gotten several rejections off the same level. And that big push we had in early December, you can see rejected perfectly off that RSI level as well. So the bears still firmly in control on this one. The stock just can't seem to get out of this, this bear territory, or where the sellers are sort of dominant on a supply-demand curve. Now, I mean, we are seeing some divergences. The momentum from the PPO or MACD, whatever you want to use, it has been trending up, even though this trend has generally been down. So that's a divergence. Our money flow has been trending up, even though things are moving down, and you can see stochastic oscillator doing the same thing. But right now we're not seeing the volume or the price action. Price action has to be dominant, basically, or the thing you pay attention to most. And right now we're just not seeing the buyers show a lot of conviction yet. I think I've said before, when we're truly finding a bottom on this, and things are going to start turning around in our favor, I want to see the buyers start fighting over each other, jumping over each other to get shares, and we're just not seeing that. The volume remains fairly low, so I think there's a potential that we head lower, and especially if we lose this level here. Now, of course, the X Factor news, we can get news any day. Assays are delayed. There's a lot of information still to be digested by the market because the company still needs to put it out. So, how that news plays out is anyone's guess. When that news comes out is anyone's guess. But this chart, think of this chart as basically just gauging the emotions and expectations of all the various market players, the investors, the traders, the short sellers, institutional investors. This is just everyone's sentiment sort of leading into news. You can see that there's just generally a slow bleed of the stock. There's just not enough buyers to take up the supply, and we're just generally making lower lows. We really haven't been able to convincingly hold any sort of level. So that's what we're looking to change. If we're going to turn this around, we want to take a quick look at just zooming out a little bit here. So this is this long-term support level that I'd identified previously. So we're below that now, so we expect it to act as resistance. So any sort of rally is going to have to defeat this area on the way up. So if these very short-term supports in the mid-80s do not hold, then I still think this is the area, this 70-cent area, give or take, would be the area I would expect to see, the buyers really show some conviction. This was sort of the area that we did get consolidation for a while, and then we got that springboard into the big move that eventually, we ended up getting into the $5 range. So I expect there would be a lot of buyers down here. I don't know that the selling volume would be super strong. So if we do happen to get to the 70-cent range, I would expect some sort of rebound and the buyers to sort of flex their muscle. But again, just from the longer term perspective, you can see how many touches we've had on this RSI, and we've not been able to get above it. So the sellers are still in control on GGI. It's still below all its key moving averages. So it's got some work to do in order to turn things around. Some good news, obviously, some good assays, something that surprises the market would obviously be a catalyst to turn things around. One thing I did want to note, if we sort of zoom out to the longer term picture, we do have what looks to me as a possible descending wedge. So a descending wedge has a bullish bias. So you can see that these trend lines are kind of converging. We have had 3 rejections off this top resistance one. We've had a number of rejections off this bottom support one. The reason why a wedge is considered bullish if it's descending is the steeper a trend line is, the less. Basically, the steeper the trend line is, the harder it is to hold. So this bottom support line is less steep than this top resistance line. So therefore, we would expect there to be an easier chance of breaking to the upside as opposed to breaking down. And I mean, that if it breaks down below this, that would be a really sharp move. So even if we move down in the near term, down into the 70 zone, if we get a breakout of here, that would break this descending wedge pattern. So that's something to keep an eye on. But as you can see, still lower highs, lower lows on the weekly chart, confirming that from a long-term standpoint, the sellers are still in control and the stock has some work to do. I was curious. A question came up. I know this is a hot button topic in the forum. Is what was Chris's take on, should people be averaging down on Garibaldi, or what was the fund manager's take on that? I didn't catch the segment, so.
He was basically suggesting that, if the fundamentals are strong, then that should be a buying opportunity. However, I don't think he was necessarily being specific to a junior mining stock. No. Because, it would be hard to look at the fundamentals and compare it to an apple.
Yeah.
But
and he specifically was stating, when you're talking about averaging down, especially on fundamentals, it's a lot easier to do when it's like a blue chip stock where that volatility isn't as intense as an exploration or a small cap company. But then he emphasized again, look, at the end of the day, if you believe in the company, if you believe in the story, the fundamentals, those things haven't changed. There's a case to be made that averaging down is a right move, but you have to be careful.
Yeah, and he also referenced as more of a speculator, you should have more cash on hand because of the volatility swings. So you got to be quicker to pull the trigger.
Absolutely. Well, thank you for that one, my good sir. What are we off to next? Sorry?
We're looking at TGOD. So I think we're looking at TGOD. Can you guys hear me okay?
Yep. Yeah, absolutely.
Can you hear me okay, Brandon? Yeah? Okay. So I think we covered this one about 2 weeks ago, and I want to say we were down in here somewhere. We were still trying to decide where the where the rebound or the consolidation, the buyers were going to start pushing back. So I've kind of identified this. We're sort of in an uptrend channel now. Certainly in the short term, we've stopped making lower lows, which is good. We've put in a higher low, and we've had continuation. So we've got higher highs, higher lows. So that's what we want to see. And then recently, we just had this huge spike in buying volume and price, which is obviously very bullish. So I had pegged this 320 to 315, 325 to 315 area as a potential resistance zone. You can see we pushed through that convincingly, and then we ended up into this more longer term. It's an old support zone that the stock got support in way back when it first started to trade. We got a rebound, albeit short, right here before we broke, and it's been acting as resistance since the stock fell below it a second time. So I was expecting it to act as resistance. It did on this day, but we got this push through on really nice strong volume, and we actually got a gap up in here. So that's what this arrow here is trying to draw your attention to, is we did actually have a gap up on volume on TGOD. So what I'm expecting happen here, to just sort of frame this for people, is I believe on the 24th of January, the company announced that it was establishing a record date for its spin-out of its dividend, a dividend spin-out to shareholders of the spin-out company, the SpinCo company that they're going to create. So here's the problem, that when you set this dividend date, and the dividend date I believe was January 30th or 31st. I believe it might have been the 30th. I think it's today. So here's the dilemma that poses for a short seller. When you're short on a stock, you are required, so you're basically borrowing someone's shares, you are required to pay back any dividends that are issued. So if a company issues a cash dividend and you're short the stock, whoever shares you have borrowed, you owe them that dividend. So where the problem comes in for the guys that were short on TGOD, and I think there was about a $6.5 million open short position going into the 24th, and that was accurate as of the 15th or the 21st of January. So what that poses is anybody that's short on the stock, it's going to force them to cover their short, because they would be unable to deliver those SpinCo dividend warrants that are being issued by the company to the rightful owners of the shares. So I think that's what you saw here. We were in this uptrend, and then all of a sudden we get this surge in volume, and we sort of exceed the uptrend. We go outside of the boundaries, and then you have to remember that when they issue the dividend date, it's the record date is today. That means you have to have beneficial ownership of the shares today, which means if you were trying to cover a short sale, you had to cover it by Monday. And the 20. It would have been the 28th, I guess. It's basically 2 days before, so it's the settlement date that counts. So that's why I think that's why we had this spike. And I wouldn't be surprised if the share price comes back into this channel, and hopefully we get continued buying of the stock within this channel. But this is just a very short-term push, and you can see the day after the stock would be trading ex-dividend, what's called ex-dividend, because anyone buying today would not be eligible to own the dividend warrants. Then you can see a bunch of selling pressure come back online, and we're pushing back down towards, back into the channel. So because this was a resistance area, I would expect the area that it's sitting in right now, I'll just update the chart. I don't know what it's doing exactly right now. So yeah, we can see we're sort of moving into this previous resistance area. This area should act as support, and for whatever reason, if the price isn't able to rebound off of here, then we still have this broken resistance area that should act as support as well. And then we also have this rising trend line. You could call it an angular support line. So we could potentially get a rebound off of here. And failing all of that, we also have the 50 and the 20-day down below here as well. So there's a number of areas that we could find some support. So again, the less that this price comes down, the better the chance is to continue the trend and continue to make higher highs. So where the buyers start pushing back again, I see potential in here and I see potential in here. Those would be the areas that I would be looking at, in the short term to see where the buyers are going to push back.
Hey, John, just a quick
very nice
question.
Move on the RSI here. You can see, yes. Yeah.
Is the record date the 30th or the 31st for TGOD?
I thought it was the 31st.
Okay.
Or sorry, the 30th.
Okay.
I thought it was today, which means you had to buy 2 days ago.
Gotcha. And also, just not to throw you off there, but right at 2 o'clock, the Dow and S&P 500 both just had, and NASDAQ actually, both had really nice jumps up opposed to down.
Sorry to cut you off, Johnny.
Okay.
Yeah, no problem. That's important stuff. So the market seems to be reacting positively to the FOMC minutes. So anyway, yeah, I mean, I still own the stock. So for disclosure, I do own TGOD, and by the way, I missed it. Of disclosure, I do own Garibaldi as well. So even though I do own Garibaldi, I'm being honest. I think the stock could potentially go lower than where it is unless we get some news soon. TGOD, it's nice to see the buyers starting to flex their muscle a bit. We did get into overbought territory here on the RSI. You will not see that sort of move if the sellers are in control of the stock. So this has definitely been a nice little push off the bottom. The imbalance of power that the sellers had over the stock for this period here has ended. And now it's up to the buyers to see if they can continue the momentum and keep putting in higher highs. So we're looking for a higher low to form here at some point. Here's our last low. So I think the odds of it are very high. And then what does the push look like from that, short-term bottom? If we happen to eclipse this recent high, which we did get a rejection right off the falling 100-day moving average, then I think I've mentioned before, I would be looking at this $5 area and maybe slightly below as a very key test of resistance. We had a number of support pushes off that area. When we broke that area, you can see it instantly became a strong resistance. We got a very sharp push down off of that level. So we know there's sellers up here once the stock, or if the stock gets back up into the $5 range. So expect a battle once we get up to the $5 range.
Nice.
International Canna brands. I'm not super familiar with the company. I remember hearing this. There's a lot of traders really love this one at one point, and I would expect it was on this big run it had here. There's a lot of volume. So one thing I'm going to throw out right away as a caveat. Yeah.
Oh, sorry. I was just saying.
One thing I'm going to throw out as a caveat is this. Is this stock is very cheap. Like, it's around the 10-cent level. It's basically almost single pennies. I don't personally find TA all that reliable on a stock that's this cheap. I just find you have to be really careful with your indicators and such. So I'm just going to preface all the comments I'm going to make based on that it's not always the most reliable, because the price movements, the tick half a cent changes the stock a lot percentage wise when it's this low. But anyway, looking back in time, we see a resistance zone between 14 and 15. The stock had trouble getting above that. Once it did, it acted as support. We saw a number of support bounces there. When we lost that support, look where we are now. We're right back in that same area, so it's acting as resistance again. So it's broken support now acting as resistance. Basically your TA 101. So we have broken. It looks like we've broken this downtrend. RSI we got into a slightly overbought territory. You shouldn't see that if the sellers are still in control. So that's a good sign. We did consolidate here sideways for a bit. Some churning in sort of a tighter range. And then when we did break out of that range, you can see the volume start to pick up a little bit, which is good. So we were getting higher highs, higher lows finally. And then now we're into daily consolidation. We do have lower highs and lower lows. So right now we have 3 sort of indecisive candles in a row. So if you had a doji when in this downtrend here, the short-term downtrend, getting a doji like that is a potential reversal sign, but we need to see follow through, and we have not seen that yet. Yesterday we got more indecision, and today that's what we're seeing, the same thing. And keep in mind, because this is a penny stock, it's actually very easy to see these doji candles form. But so what we want to see, if you're a bull on the stock, you want to see some sort of confirmation candle that the buyers have taken back control. So we want to see a white candle form here, and the bulls sort of push off. So this 9.5 cent area looks like it's the short-term low to be watching for support. Try and hold that area and push up. Resistance, we have the 20-day moving average at 10.5 cents, and then looking up at around 12 cents and then 13 cents. So there's a number of moving average resistances up here as well. But it's nice to see this move. The other thing I would caution, I did take a look at the share structure on this one, and they issued a lot of paper in the last 4 months. There was a ton of, basically I think the share count almost doubled. The share count almost doubled basically. And I think we're seeing the effects of that. That's why we're seeing this downtrend. There was, the company accelerated their warrants. They had a bunch of warrants issued around 10 cents. Maybe even a little bit lower, and they actually forced an expiry date on those. So I think that's where you're getting your selling pressure in here. I mean, obviously the overall markets weren't helping. And then all of the private placements that they closed in late August, those would all be basically coming due in late December. So you have a bunch of 5-cent paper. I want to say it's in the order of about 30 million shares, just off the top of my head, and maybe my memory is not the best, but that's a lot of 5-cent paper that was issued to the market. So that typically comes back to, haunt you in a sense that it can be a real drag on the price, making meaningful gains when you have all that paper, and that's all free trading now. So I would expect that to be sort of a headwind for the company in trying to make some really big moves like it did back here, because you've issued so many shares. And now that's the important thing is, yeah, you issued the shares back here, it was back here back in August, but now that it's free trading, it really shifts the supply demand balance. So if people wanting to take profits from those private placements, all that paper comes on the market. Now all of a sudden you have to find buyers to soak that up, and if you can't find buyers, then the potential to fall back to the 7-cent level, because there was some paper issued at 7 cents and there was a whole bunch issued at 5. There's going to be a tendency for the stock to want to pull back to these levels, and the farther it goes from those areas, the more incentive obviously for those private placement holders to take profits. So that would be something I would watch. So I would not be surprised. This is my own gut feeling, is it might be tough for the stock to, to continue this recent momentum and make new highs, because you've got that overhang of paper, and that it can sometimes take quite a while for that paper to move into stronger hands, where the people that are in a profit position, they're selling, and the people that are buying it, they're buying it because they see this as a decent entry point, a good base to start building a position. And that can sometimes take a long time. It can sometimes take months, depending on how much volume you have. And you look at the stock, sometimes it doesn't even do 500,000 shares, which when you're trading at 10 cents, that's only $50,000 worth of shares trading hands. So sometimes there's not a lot of liquidity here. So those are things to be cognizant of if you're holding the stock. I just wanted to mention that.
We've got basically 5 minutes left.
I appreciate it.
Yeah, and I gave Ross Chapman a shout out because someone sent me a screenshot of something from his chat room where they found this something in Crops Financials. John, do you have that? Do you have that up by chance? If not, it's okay. But there was people were looking over their financials and their advertising budget.
Oh yeah,
a little big. It's making me think of that Joe Budden song.
Yeah.
You know what I'm talking about?
No, I don't. I'm just laughing.
Anyways,
good times.
Is there any way you can pull it up, John?
I don't know how clear that will be for everyone. Can you guys actually read that? It is up on the screen right now, but
we'll switch back. Boom to Johnny Mac's screen.
Might be a little.
They might be.
It might be a little small for people to read.
So we're looking at crop, and
yeah,
you can you see that?
So what they're talking about is this.
There it is. Yep.
Are these numbers right here, basically?
Yep.
4.5 mil after 9 months.
So 4.5 million. Yeah, so that's a fair amount of advertising and promotion for sure, and just 2.5 million just in the last 3 months. The quarter ended the last 3 months as well.
Got it.
Got to risk it for the biscuit, apparently.
Anyone want to speculate on what they'd be spending money on?
Well, you see a lot of their stuff everywhere, right? Like, don't get me wrong. These companies
that's a lot of money.
Spend money, but that's a lot of money compared to market cap. Yeah, they need to spend money regardless.
Hold on, let's look at the chart. I'm going to pull it up on my phone, but obviously it's not going to be useful here because I want to see.
What if I just do it on here because I have the power of NDI because I don't have a MacBook.
NDI.
Instead, I have a PC, and I can do things like this.
So I'm seeing on the 1 year.
He's not chirping.
Anyways, John, you agree that's a lot of money?
I have the chart up here, Carl. It looks like it's in a.
Yeah.
Yeah, it's a lot of money.
I mean,
companies have to promote. They have to advertise themselves. It's hard. When you're trying to attract capital in the junior sector, you have to promote. It's just like advertising as a business, but without having seen other expenses that they're sort of undertaking, it does seem a bit high. It does seem a bit excessive. But I actually don't know what some of their other expenses are. But yeah, gut feeling right off, just seeing that particular table, it does strike me as being a little bit high, I would say.
Got it.
Well,
so, I mean, the chart, if the promotion is intended to get some buyers, I mean, the chart is basically moving sideways. We're very much in a sideways consolidation right now. It's not really moving one way or the other at the moment. And
looks like a wave in an ocean.
It's in a daily equilibrium pattern.
Great TA. I love it.
Well, dude, appreciate it. Another fantastic show with Johnny Mac and the fund manager, Mr. Chris Arthur. And all of our guests.
Aurelio.
It's really cold. We're very pale. I need a vacation.
Hey, I'm not pale.
You are
really pale. White. I'm more like a flush pink, actually. But honestly, man, I appreciate it very much for you coming on. For all of our guests who came on as well, thank you very much. Action-packed show today, lots of different comments. Be sure to follow us on FTM Investment on Twitter. You can go on to Facebook, follow the Money Investor Group over there. FTMIG is our Facebook page. And here, on one of the greatest networks in all of North America, if not the greatest, the Midas Network.
Yeah, and you know what? Feel free to join our community on Facebook. Get in the groups.
Absolutely.
In our Discord chat room.
Pretty much just like what I said. I love the doubles.
I'll be honest with you, I was really not listening.
No, but seriously, like you guys, we thank you for joining our community.
The hat's coming off, folks. The hat's coming off. The show is going off the rails. We've got Ed in here. We've got James in here. Half an hour they're going to be on. We'll see you in half an hour. I get to point now because Greg's not close enough to stop my finger from pointing. We'll see you very shortly. Take care.